Hello and welcome to the Digi-Tools and Accrual World podcast, the place to go for all your accounting app news in the UK and beyond. This episode is sponsored by FYI and we'll also be joined later on by FreeAgent and Employment Hero. But before I guess we do any of that, I should welcome my co-host today, which is Indy Tatler. How are you, Indy?
Bloody amazing, Ryan. I really should stop saying that word. It's still a swear
amazing?
word. No, it's a B word, isn't it?
Oh.
The technical difficulty when you have children is you try and find alternatives that you think are less severe, but then you end up blaspheming, and that doesn't make it better. The other day, I was saying, oh my God, and then you know that someone will still get offended by you saying, oh my God, and you're thinking this is better than me saying WTF.
That is true, yeah. You have to try and reduce, or at least Picard, some of the language. But I don't know, I tend to be relaxed now. I swear more than I probably should. I'm more concerned about physical altercations from my children rather than verbal ones.
No, do you think that people in our industry are big swearers?
I don't think so. I think it's just, I guess, our upbringing to some extent. I had a dad that was in the building trade and swore all the time. So I think it's just part of my background. And my wife is quite a sweary person as well. So yeah, I think that you're just what your environment is to some extent.
But as Gandhi says, that we could be the change we wish to see. So if you wish to stop swearing as much, maybe you should just... If you wish to stop being around it, you should stop swearing.
I think my point was, I don't care. So I don't need to make that change because I don't see it as bad as some other things. It's just a word. It's if it's used in the aggressive or antagonistic context that I think is problematic. Is how it's used rather than the word itself.
Okay, so if it was pointed at you, then you'd be upset.
Yeah, if it's used in any word, you can put any word in there. But if it's used to bully or antagonize or demean, or if your objective is to be unkind, then it's something that, you should look at the language that's being used in that, but you should be stopping that in general. What's the word?
Yeah, true. Although I don't really hear many people in this industry in general swear these days. I could be wrong, but I go back to the early 2000s when I was in the world of work. Well, it's not early, probably the mid to late 2000s. And I do feel that people were a lot more sweary than they are now.
Is it just because we work from home more and we're not around people?
We've got probably, little ears in earshot. Maybe that, maybe also just the culture has changed slightly. Maybe we've had different generations that have come through and they've taken a harsher standard on that type of language.
Maybe, yeah, it's true. It's like the fact that also eating more healthily and being fit. And that's also, I guess, working its way upwards, and we're trying to eat more healthily and be fit.
That's right. And that is why we like Generation Z. They keep us on our toes and make us feel young. And as a result, we all act like 10-year-olds. I love it.
I'm not sure it makes us feel young. I think it makes us feel old. And then we're like, oh, actually, I want to be young, so I need to act like them. I think that's probably more how it is.
Actually, the other day, I was just talking to two people about this. And apparently, me saying the word meh really shows my generation, my age. So now you don't say meh, you have to say mid.
Oh,
that makes me sound really old when I say that, because there's probably someone out there listening going, oh God, you bean. Anyway, that to say, we're no longer cool.
You bean. I think that's a great terminology.
Well, today's podcast, Ryan, tell us about it. Who has supported us today, and who else are we going to hear from?
Next, we're going to hear from Stu from FreeAgent. We're going to dive into how the various platforms are handling MTD. They've got different approaches in how they handle both sole trader income, landlord income, very different ways that they're all dealt with. We're talking through that, and also FreeAgent's approach on that. We've been talking a bit about making tax digital. It seems a pretty important topic this year, maybe the biggest focus for all accountants out there, especially as we roll into the income tax area. And FreeAgent have got a big focus on this. They always have had a big focus on those smaller businesses, smaller entities, sole traders, landlords, etc. And something that has come across, I guess, from multiple conversations, multiple different people, is how individual software companies handle data and how they process your data is quite critical, because it has an impact on you in the way that you will manage your day-to-day operations. So give us some context then to why this is important.
Yeah, thanks, Ryan. So FreeAgent has separate licenses or separate accounts for sole trader and landlords. And the reason we did this was to keep bookkeeping as simple as possible. With the MTD-sized cohorts, we realized that often landlords don't see themselves as a business, or they're accidental landlords, and we created a separate license for this. So what this essentially means is you can sign up to FreeAgent as a landlord, and you will have all the business tools if you need them, like invoicing and payroll and bills and things. But you have a dedicated property area, which the sole trader accounts don't. And that gives you the ability to separate out your income streams if you need, and keep landlords separate, so that you can go in and add your properties, add all the users that have ownership splits of those properties. And then each of those individuals that are on that single landlord account can submit their MTD obligations individually, so that it's completely separate from those that require the sole trader streams and then the sole trader account.
Yeah, and this can get quite messy, especially if you do have multiple ownership. You've got a big property portfolio, because every individual person is going to have the other things they're doing, right? And trying to manage that fully in a single ledger becomes just chaos. So it makes complete sense to me, the segregation that you're doing on that. Yeah. But I assume that the individual person can still see their various income streams when they're going through the filing process to some extent.
Yeah, absolutely. So with MTD, because HMRC are holding a lot of the calculations that they do, whenever an update is made, either a Q1 or a Q2 or a year to date, which we support as well, we will pull back everything we know about that individual under the income tax umbrella and show that in the typical tax return. So even if you're handling your sole trader income somewhere else, or dividends or CIS deductions and any sources of income and expenses, we'll still show that in FreeAgent. So we keep the landlord account really clean with landlord only income and ledgers, so that you can get a really good handle on just isolating that really easily without having to go into every single transaction and say, this one's from a property, this one's from a sole trade, this one's from a partnership, etc., etc.
Yeah, and I really like this in the fact that as soon as there's a little bit of complexity that comes into property management, a lot of individuals are now having to be directed to a property-specific software that's just handling that, and they're using a completely different software for their sole trader or partnership income. So the ability for you to segregate the functional aspects inside your platform, so that you're essentially turning on or off what is relevant, means it's focusing the mind and giving the advanced functionality to the specific way that income operates. Did you make that decision really early in this journey then, as you've been building out the product?
Yeah, absolutely. We made it back before MTD ITSA, as it was probably known back then, was cancelled around that Christmas time, because we really thought early that with these types of clients, with these businesses, often, as I say, they don't think from themselves as businesses, keeping it as simple as possible, it is the route to success, and reducing the risk around not tailoring it towards them being a property and considering them as a business. And a lot of these businesses aren't complex, but the sole trader account can get very complex if you use all the realms of a business tool like FreeAgent has, is the way to make it as successful as possible for these individuals and landlords.
Yeah, it makes sense. I assume you can get a lot more automation out by doing this segregation, right? Because you're not having to bring in, like you say, the various complexities of sole trader alongside the various complexities of property. And that just makes or opens up a lot more error in automation. If you keep it simplistic in a repetitive, especially with property where you've got repetitive income, generally you have repetitive expenses, but then you've got complexities and segregation. I assume then the individual can get a lot more automation benefits out of each ledger.
Absolutely. What we're seeing in the wider market, Ryan, is when you're combining sole trader income and landlord income under a single license, the reconciliation of transactions and invoices and all the admin tools becomes more manual, because automation often doesn't know and can't know if this is property income, and if so, which property, versus, oh, this is a sole trader income, or this is drawings, this is completely outside of my business rules. So when you are a landlord, we have been able to point our automation deliberately at landlords only, ignore any of the rest, and say, we know this is property income, so we're only looking at which property or which individual. And as you're able to set up your properties in FreeAgent as properties, and you're able to set up the owners on the account as owners and put their percentages of that property, it makes the automation far more powerful. Or another way of saying, it takes away the headache of manual reconciliation, because we know that you're a landlord and it's all about properties all the time.
Yeah, it's the same way that I've experienced many times. If you're doing bookkeeping for a client and they've got departments or cost centers, that removes so much of the automation that you can achieve. And that, essentially, I guess if you've got a single ledger, that's what you're having to do with segregating your property and your sole trader, because that's the only way of getting that differentiation. So you already now removed a huge amount of automation you can get, especially in those data capture tools. Is there any other, I guess, notable weaknesses that you can think of when it's all combined in one system?
I think when it's all combined in one system, I mentioned the kind of automation there. That is probably the main one of the manual reconciling every single one. But there are a few other bonuses that we're seeing from combining them together. I guess the flexibility from a practice perspective and visibility of knowing what's going on. What we've seen has been really positive to our practice partners is for those users that have landlord income or are solely landlords, seeing that they have a landlord account and isolating it from their sole trader income, or even often multiple sole trade incomes, has been really positive. So when it's combined together, we've definitely heard from that kind of practice partners that can get confusing about really knowing their business position or how well their property is performing compared to their sole trade is performing. So keeping that separate has definitely been a bonus for us. And I can see that, or we hear that being quite a difficult situation to manage from a practice perspective in the rest of the market.
Definitely, especially as I guess bookkeeping and outsourcing is now coming into that landlord or property management space. And there's so many automation tools that can overlap or wrap around the ledgers to prompt and trigger what you do keep on top of it. And as you say, it was all in one ledger and now you're handling two completely different operations. You can't benefit from any of that. Same with the insights tools. So it makes a lot of sense that, yeah, if they're in separate ledgers, you can bolt these tools on in separate ways, be that automation and processing. So I know especially FreeAgent have built out that marketplace of apps that can really provide deeper insights as well as automation. Yeah, it makes a lot of sense as you kind of talk through this process. And I assume that because FreeAgent is still free, if you're using an NatWest account, it doesn't matter how many ledgers you add on.
Yeah, exactly that, Ryan. I think it was a deciding factor in the decision to go with a separate license. As I say, it's not the main one. The main one is certainly around risk and simplicity for the business user. But because it's still free with your NatWest, Metal, RBS, etc., having a sole trader and a landlord sitting next to each other, especially if you're a practice, is such a fantastic selling point, and we see such growth through these revenue streams. So yeah, absolutely, it's definitely still free, and it's a bonus when you can have that away.
Yeah, it's really good for you to come on and identify these differences, because as FreeAgent have moved into now the big four, the small business space, a lot of individuals look at them and go, they're all the same to some extent, right? But there are differences, there's nuances, and you have to, depending on how you want to operate, pick the right path. And this is a very clear differentiation of how FreeAgent set out their stall for the MTD space.
Definitely, Ryan. Absolutely. And I think the way that we're reaching out and further differentiating that ties into this strongly is how much data we're putting back into Metal and into NatWest and into the Royal Bank of Scotland, where we have the tax timeline that shows all your upcoming your tax dates, the obligations, the amounts, and we now reflect that inside their banking apps. So whether you're with any of these banks, you can still see all of your tax data and obligations, and then you can get taken to FreeAgent if you want to do more. And it's the same with our bank reconciliation, is two-way with inside a Metal and NatWest. So often these small businesses, or the smallest of businesses that fall under MTD, you don't need to be in FreeAgent to do these things. You can be inside the bank. And that for us is such a nice differentiator, because the Venn diagram of banking and accounting is ever so closely linked now and overlapping into almost a circle these days.
It is, especially as you've now got different banks buying other accounting software, where you've had this partnership for so long that you don't need to wait for all this kind of integration to be built out. You've had it there for
exactly.
It's a massive differentiator. So thank you again, Stu, for coming on and running this through us. I've learned something, so hopefully everyone else that's listening has also learned something new today.
Cheers. Thanks so much for having me, Ryan.
I'm kicking off this week. The ICAEW has unveiled the biggest overhaul of the ACA qualification in 30 years. Do we think that's tied to the fact that in general people have really complained about whether the world of any kind of qualification is keeping pace with what's happening in the world of work and in the type of environment that we're working in today? Possibly. This is branded the next generation ACA. While the exam structure is still familiar, 3 levels, certificate to advanced, the content now blends traditional technical knowledge with a specialized learning platform. So trainees will complete 30 micro learning modules covering everything from Excel and carbon accounting to inclusivity and managing difficult conversations. So the platform adapts to each student. So learning is personalized based on skills, based on employer needs, and based on sector demands, making it so much more customizable. And for the firm, I think that really matters because it means that graduates will be ready to add value immediately. I guess what they're trying to do is prepare graduates, not just on the compliance tasks, but the client interactions, advisory work, and strategic problem solving to help have those conversations that, like we said on a previous pod, if that junior level is going to be really impacted by the advancements of AI and technology and what can be done via Copilot, then it means that the emphasis for the junior level needs to be on being able to talk about some matters that perhaps even accountants at a senior level are only just starting the conversation on, things like ethics, sustainability, and technology that are going to be big business challenges, and trying to think about how to pivot or evolve their business in this landscape. Ryan, what do we think about this?
Oh, it's definitely needed, wasn't it? The bit I think that I was a little bit taken aback by is the fact they said, I think in the article, they'd future-proof the qualification. It's like, how can you say you future-proof the qualification with what's happening with AI at the moment? I don't think we feel future-proofed at all in our jobs. How do we feel that the qualification's future-proofed?
Yeah, but how can, like, even any business right now is not future-proof in its own right? So every single business is going to be impacted by this. I think they're trying to do the best that they can with the fact that they know compliance is still a cornerstone of accounting. They rely upon that. So now the value add is in different types of advisory work. So I think that's why it's picked on things like ethics, sustainability, inclusivity, because these are all of the areas that still have significant importance and impact for society, and there's a lot of attention around them, but they're still grey in terms of how that practically needs to be applied. So I guess that's why they've incorporated other goals into the learning agenda of the ACA.
Yeah, and ethics has been there for a long time, but I think the main thing that they're doing is, I guess, putting it more to the forefront and also creating a lot of breadth, which is needed now, right? With the fact that you can move into different specialisms in accounting. We could do that like with tax, and we could do that with audit in the past when we went through the accounting qualification, but they're realizing actually the skill set is much broader now. So yeah, I think it's a good step forward, and hopefully we can get some feedback on someone that's going to be going through it.
Very nice.
I've got something a little different, which is that we talked about AI endlessly on this show, and we've always, I think, taken the viewpoint as a profession that we're still needed. And John's always argued that we're not. I mean, the fact that people just go and use AI and they'll only come to us if they've got problems. A bit of research, and it turns out the majority of taxpayers are using AI to prepare their tax returns, ignoring the risks associated with doing so. They are getting enough confidence that what is being presented to them by AI is going to be accurate enough to avoid a fine from HMRC. I'm not sure that's particularly correct. I think there's this bubble of hype and hope around AI at the moment, and therefore they're looking at it that I don't need a tax professional to prepare my tax return because I can get AI to draft it for me. The argument is that actually for a long time you've been able to draft and submit your tax return yourself through HMRC and the government gateway. So why haven't you done that historically if you now think that AI can do it? It's all about sense checking and picking up things that you wouldn't see. And I just don't think AI is there yet. So quite scary that over 55% of people are using ChatGPT or equivalents to draft their tax returns and answer the questions they've got on this. I think realistically, as a whole country, as a whole population, we are placing too much reliance on AI in the wrong places. Yes, you should use it to get maybe a step forward, but still, for certain areas, get a professional to look at it if you would have got a professional to look at it in the past.
I'm inclined to agree, but maybe the fact is that the model by which accountants charge, professionals charge, is no longer fit for purpose, because clearly this is a gap that's being exploited for a reason. And so maybe we should be also looking at whether there is a version of when you use an expert. If you use an expert, let's say in any other form of trade, right? You go and buy the parts off eBay for the repair of your, I don't know, I'm going to give you a contextual example. My cooker broke recently and I employed someone to examine it and tell me what was wrong with it. And then they said, in order to actually fix it through them, I needed to order the parts through them. But of course, you could get these same parts on eBay for cheaper. He's not going to take the liability of fixing parts that he hasn't ordered, and so therefore he won't work on it at all. I guess the same thing happens with accountants. Now we have to take this view of whether you're comfortable being the one that says, okay, I'm okay to look at something and approve it or work with you on it, knowing that the AI is something that you've relied upon, that you've fed, that you've taken the lion's share of work on, and I am now doing some level of diagnosis on this. We've got to look at it with fresh eyes, as maybe this is a gap that the market is experiencing and could, in some cases, yes, be a threat. In other cases, it could be an opportunity.
Agreed. We need to relook at how we provide our service and pivot, to be honest.
So I have got something different and moving away from that and more to something that I probably was following earlier this year, especially in lending tech. So TRIVER, which is a fintech, has raised £114 million to accelerate its AI-driven invoice finance platform. I resent so much that it is called AI driven, because I 100% agree that it is a good invoice finance product, but this makes it sometimes seem just noisier than it is. The pitch in itself is really compelling. UK small businesses can now access advances on their client invoices in under 5 minutes compared to the days or the weeks with traditional banks. And the way they've done that is through the integration with other accounting software partners or data partners that make the cash flow seamless. The catch, I guess, is that while it's really impressive for the speed, embedded finance in its own right comes with like different lending rates and that you have fees associated to that. And so you've got then something that means that you're perhaps having a reliance on a fintech and a fintech's lending risk on this sort of high cost short-term credit for working capital. So it's really good for businesses actually that just want instant advances on cash flow. But I guess it's also something that you need to be prudent in terms of the financial management and long-term funding strategies. I think TRIVER's done a really good blend here where they have allowed you to continue to have a revolving facility of some kind, but it's linked to the invoices as a collateral. And they've managed to then use the AI, which is the AI portion of this, AI underwriting, which I think is slightly more intelligent than what happened in most lending, which is like rules-based and open banking connectivity and perhaps some accounting data integration so that you can understand like what the underwriting thresholds were. But now that means that they are targeting the API first integration so that accountants can offer immediate liquidity with minimal intervention. It's a real operational win. I guess they're positioning it as something that then solves a genuine pain point for UK SMEs in their cash flow. But again, as we know with many softwares in this space, it's about being able to weigh that against convenience, cost, sustainability, what's the best long-term option for that business. Really good to see, though, that they closed around 140 million. My understanding earlier this year was it was going to be back-breaking for most in this space. So the fact that they've managed to do that, and they have then, as a result, most of that will obviously, the 114 million, be used to actually advance money to SMEs. So great to hear.
Yeah, it is good. And look, you're the expert in this space, Indy. I'm going to rely on your assessment here. And it probably isn't AI powered, not that much anyway.
But hang on, it's got some AI in it, but it's not an AI first or an AI driven business, which we'll come on to later.
Yeah, no, definitely. I've got something that is also referencing AI. I believe they are using quite a lot of AI in this, but this is Caseware's new tool for attacking, I guess, the accuracy in financial statements as part of the audit process. So they've called it Validate, and essentially you upload your financial statements into it, drag and drop in a very simple way, and it looks at any of the disclosures, any of the financial information directly in it, and cross-cast checks and verifies the data in there. If you upload a subsequent document or financial statements, it's going to see what you've done, the changes you've made, and just look and highlight how those data points have changed over time. It does this all in a very smart and color-coded way. I wouldn't say it's a huge thing. It's not a huge thing that we've been doing inside audit for a long time, but the accuracy of it and the fact it automates that entire process does make it quite powerful. Depending on how they're going to price it, which I don't know enough about this, it would have to be quite a small price to justify it, in my opinion. But I know that historically, back in the days when I did audit, it was something that just took a long time just to go through and cross-cast and check the financial statements. So the fact that a tool can now do this completely automatically, I think is a great little step.
And then I have got something else which I said I would return to, which is FinTech Lite has raised $30 million in a Series A round. That is $30 million in a Series A round. And I didn't think I would see that again for a while with some of the fintechs that we had seen popping up around. I know that AI has obviously there's been a lot more growth and a lot more money being chucked at it. But what's really interesting about this one is that these guys have reported 30x growth over the past year. And like legacy ERPs or general ledger platforms like Xero, like Sage, etc., Lite is an AI native from the ground up, claiming that it can process 280 million records in under a second, and it can automate multi-entity accounting, global payments, and expense management, all while catching errors that humans often miss. So for accountants, the benefit, the appeal is obvious, it's time saving. And like it says, finance operations time dropped 84% after switching. So the ability to scale instantly across jurisdictions without hiring more staff has been invaluable. I don't think they will replace some of the other general ledgers for most firms anytime soon, but Lite targets companies growing at lightning speed, and startups and scale-ups with complex multi-entity, multi-currency needs. But bottom line, Lite is representing a glimpse at the next generation of, in fact, an ERP, where AI isn't bolted on, but it is baked in to the business model. It's for those hyper-growth clients, I guess, will explode in some sort of global way rather than just being in the hyper-local way. But it gives accountants more strategic oversight in multiple jurisdictions across different systems. Say you've got cloud accounting in the UK, and then you've got a penny lane over in France, and you've got an X, Y, and Z over in different jurisdictions. I think we've seen some of this on the radar with companies like Translucent, but it would be really interesting to see how this changes things from what we've already seen in the marketplace out there. And I'd be really interested to hear your take on this type of accounting software, if you are using it and how well it works for you. So if you are interested in coming on the podcast, any accountants in practice that have experience with this, and really great to hear from you on that. And then finally, this week, we're going to end with something that, again, in the AI space, Thomson Reuters has snapped up Additive, a San Franciscan AI startup that automates the most tedious tax workflow for accountants, passing Schedule K1 forms for pass-through entities. Founded back in 2023, so not too long ago, Additive uses Gen AI to ingest and structure complex documents automatically. So it's all about the time saved once more. And then this isn't just about that in terms of how you manage tricky and returns that are prone to errors. One of the things that they are reclaiming is capacity. So letting teams focus on judgment-heavy work, such as the advisory and planning and strategic decisions. Thomson Reuters is positioning this as part of a broader tax automation ecosystem. Interesting for us, because I guess we're seeing Thomson Reuters challenged, I suppose, in the cloud space. John speaks more positively of what they've managed to achieve, but it is very interesting to see them leapfrogging and making sure that they've tied their flag to a mast of AI. And they've done that in this acquisition of Additive. It'd be good to see how this one pans out, and we'll be keeping our eyes on it. Brings us to the end of App News, and we can't wait to hear from Employment Hero next on some of the things that they have been working on, and also from the experiences that they're seeing in the payroll space.
Something that I wanted to pick up on in this episode is that with what I do, moving data usually from one payroll system to another, I'm always paranoid that there's going to be an error, because if there is an error, trying to like unravel that with HMRC is virtually impossible. So have you got any stats, Kevin, about the kind of errors and on volume and impact that has on businesses in the UK regarding payroll?
Yeah, and good to be back. I tell you what, like the stat we have has probably surprised us, right? Like it's so high. What we've seen from surveys is 84% of SMEs have experienced payroll error at one time or another, which is obviously concerning. When we dug deeper into this, like it was really due to outdated systems. And part of that outdated system could be that they're still using spreadsheets, but also maybe using something that's a bit older, maybe desktop, but like at 84%, I think that's quite concerning. And I think in there, Ryan, like the reality is it just proves that payroll is complicated.
Yeah, and you'd assume the expert, the outsourced provider, is using a modern technology because otherwise there's a huge amount of risk there. But I guess the other thing from my perspective is, what's the impact of that? What's the impact on the businesses, on the individual that's running it when those errors occur?
Yeah, like I think the biggest thing is employee trust, right? Everyone's trying to run their cash flow every month, right? And they're expecting to get paid and they know when they should get paid, if it's what day of the month and what time of the day the money usually comes in, and cases they have money leaving their bank account for hours to pay regular bills or mortgages, etc. Right? So there's a really kind of tight window for people, which I think builds up the stress point for employees. Therefore, if something is wrong, especially if they're underpaid, right? Like usually that's a really it's really poor experience and it just erodes trust. We said before, like you tend to get a big reaction from people when their payroll is under what it should be, annoyed, but then they kind of have a second reaction, which is like, is everything okay in the business? And it's a trust thing, right? Like rather than, hey, did somebody make a mistake? What happened? Tell me. It's, oh, there must be something else wrong if you've got my payroll wrong. And it's quite a common reaction, actually. Yeah.
Yeah, I think it's expectation, right? It's you rely on something all the time. And when it's so infrequently wrong, when it is wrong, it becomes a huge thing. And it's that water cooler discussion, right? It's less of it now because we're less in the office, but you end up just talking to go, oh, did you hear that Sandra didn't get paid properly? And that starts spreading. And I don't know why Sandra, right? But it creates, like you say, that lack of trust. And what that can do is not directly necessarily lead to people leaving, but it can just add to that other thing that they're worried about.
Exactly. Like it can compound, right? And it might mean that they take a little bit of a step back and to question more things. The other flip side of it is for the business themselves, right? Like penalties, compliance penalties, the time spent trying to resolve things with HMRC, right? And you're just basically trying to figure things out. We see it, right? Like we see it even in the payroll forums in the UK and social media, like when people have a challenge, like with the government in terms of like submissions or trying to get things fixed, like it could be waiting for hours to get a response on the phone, but then actually weeks and months to get it resolved.
Yeah.
And even disagreements, right? So it's not, oh, hey, I've got this issue, and then the other person's, okay, I can see the issue, I'm going to help you get it fixed now. So, oh no, we don't agree with you. And then it's like you're getting into this battle. And I don't think people really quantify the number of hours that can take, but that can be a huge time drain for a business.
It is. I've worked with businesses where this has happened. And what normally happens is, it takes ages. Hours is probably an understatement in trying to get through to HMRC. But you eventually get through to someone, they probably don't really understand what's going on. So then you have to get moved to someone else, or normally hang up the call and dial again and hope you get someone that understands. And then once you finally get to that point, normally the response is, we can't do anything. You have to put it through your system and correct it. But the system, normally the one that's caused the errors, doesn't have the ability to do that. So the only way to actually rectify it is to go onto a modern system, and it forces that upgrade. And really what we're saying is, don't wait until an error occurs. Move now. And there must be other benefits. Like, what are the other benefits of using a modern system apart from just having that kind of more faith?
Yeah, to me, it's a due diligence piece, right? And that's probably not a term like a lot of like SMEs would think about. If you're running a business, right, like you got certain components and one of them is compliance. If we're being really honest here, I've not met a lot of SMEs that sit down and say, okay, like I've got this business now and I want to be super compliant. They usually say that after something has happened. Right. And I don't mean they're trying to do something dodgy. They more sit down and say, I want to grow a business. I want to be my own boss. Like I want to do A, B, and C. And then somebody else has to tell them about all the compliance stuff that they need to do. So they're not at a starting point where they're thinking about, okay, I need to do my due diligence to ensure that I'm like compliant across all parts of the business, especially payroll. because that has a direct impact on my employees. Every other tax generally is a direct impact on my own business. And hopefully I have an accountant, right, like to help with that. Like I'm big on this, right? I think that anywhere where you can actually get a modern system to protect you and make compliance easier and remove headaches, you should invest in it. And you know, like the payroll software market in the UK really well, it's not actually mega expensive, right? If you like software itself, right? Like it's not getting into, if you have a 10, 20 person firm, you're not looking at £10,000, right? Like you might be looking at 1,000 or less, right? I think for that level of investment and ensuring that you pick something that's cloud first, that's maybe linked to a professional service partner like a bureau or an accounting firm, for me, like that's a huge peace of mind. You could also, I'd hope that SMEs understand that it's in the vendor's interest to stay in business, to keep up to date with all the compliance changes and like legal changes every year. Like therefore, it's on them, right, to deliver for you, and you pay like that subscription fee. So you have a technology partner who like has skin in the game. Yeah. Whereas if you're on an old system like desktop and you get a CD update every year, I don't think you've got a partner who's got skin in the game. They've already taken your money.
You're effectively in a cash cow, right? They're not developing it. They're sat there just reaping the rewards of what they've done in the past. And that causes that compliance risk, because they haven't, as you say, got as much of a vested interest in making sure that it meets the requirements of their customers. Because really, if the customer's going to leave, they're going to leave. They're just making the most of the customer base while they can.
Yeah, like I remember doing it. Like the CD would come in the post, right, every year for the accounting software, and you'd go, oh, we've got to stop working for 3 days, make sure this like uploads properly. But my view on the SaaS industry is you pay your SaaS subscription monthly. But from a vendor perspective, I see that as we must impress our client monthly. You know, it's not like we're waiting to get paid and it's a smaller amount over like an extended period of time. I'm actually like, hey, like we're charging somebody monthly, therefore we need to deliver. And then also something like it's come up recently, and I'm not trying to have a dig at competitors, like, but choosing a startup for compliance software, a smaller startup, is also risky. That falls into due diligence for me. Will they be around next year or the year after? You just got to check that stuff, right? Like, and just make sure that we pull the financial statements. We can take a look if you're able to read them. But you got to go with someone you can trust, right?
Yeah. If you're going to take a punt on a piece of software from a risk perspective, you don't do it with payroll. Yeah. Maybe expense management, right? It's a low risk area. You can do it, a new player in the market, but it's a bit of a punt to go with that. Look, and I guess the summary of what we're saying here is you should be on a modern cloud-based payroll system. If there's anything that you should be doing, it's payroll that you should be investing in, because it's the high risk area. You don't want to annoy your clients. And if you've not done that yet, now should be the time that you're looking at it, because essentially, especially with AI, you're going to maximize the utilization of the system, because that's where all the investment's going.
Spot on. Can't agree more.
Thanks, Gary, for coming on, and we'll catch up with you again in the next episode.
Thank you.
Thanks again for joining us on this week's Digi-Tools in Accrual World episode. We are delighted to be able to bring to you the latest news in the accounting tech sector, but also to talk to you about some of the softwares that we think that deserve a second, a third, and a fourth look in. If you are interested in coming to us on this podcast and talking to us about your tech stack and your latest challenges and the things that you are implementing technology for, and that could be all levels of technology implementation, from looking at how the different agents are working within your practice, or building something out for yourself, or perhaps using a new technology that we've spoken about on this podcast, then please do reach out to one of myself, John, Ryan, Lee. We are the team that's behind this podcast, and we would love to hear from you and have you on the next episode, debate it out with us, or even just talk to us about a problem that you are actively solving for, because we have obviously got a lot of different perspectives that we'd like to bring to the rest of the listenership. So thanks for joining us. And if you are interested, then reach out, and we look forward to catching you on the next one.